السلام عليكم ورحمة الله وبركاته. معاكم أحمد ماجد في قناتكم بيتكوين فور يو بيتكوين لك. النهاردة معايا فيديو بسيط بيشرح ازاي الماركت بيمشي وازاي الترند بيحصل وازاي الفيزز في الماركت، عشان بس نبقى احنا فاهمين احنا داخلين على ايه وازاي يحصل عملية التريد، وازاي لما هتعمل انفست ازاي انك تبص على التشارت متبقاش قلقان. فهسيبكم على الفيديو ده وان شاء الله نتقابل تاني.
When you are looking at an asset on a chart, you are seeing the action of the price between buyers and sellers. That's why we call it price action. As traders, we're trying to trade with the flow of the larger buyers or sellers in that market. These buyers and sellers not only make the market move, but make it move in cycles. Phases are small predictable patterns in market price, driven by cycles of buying and selling. And now, you're going to learn how they work. It would be easy to think that when the price of a market goes up, it does so in a straight line, but this is not normally the case. If you look at any chart, you will notice that price tends to move in a very particular way. It almost looks like it's breathing. In this example, we can see that the price is trending up. But as it does, you can see the undulating movement described by our breathing analogy. Price goes up, back down for a little while, then resumes its upward motion before going backwards again. In this reverse example, we can see the market is trending downwards. Again, you can see the breathing motion quite clearly. It goes down for a while, then back up a bit, then resumes its downward motion before going backwards again. As traders, we call these cycles or phases, and understanding them will help you identify entry points for your trades in a trending market. In this uptrend example, let's simplify the chart so we can more easily see what is happening. It is now clear how the price is moving in these cycles or phases. As the price moves upwards or in the same direction as the trend, it is said to be in phase 1. At the point the price starts moving back down again or against the trend, we consider that we have entered phase 2. The cycle then repeats. You will also notice that in general, phase 1 tends to be longer than phase 2. The ideal time to buy in this pattern would be at the point that phase 2 ends and phase 1 is beginning. Or in other words, at the point at which this bounce occurs. It would not be a good time to buy at the point at which phase 1 is ending and phase 2 is beginning. With a downtrend, it may help to imagine you are holding up a mirror to the uptrend example. Phase 1 still occurs when it is in line with the direction of the trend, which in this case is downwards. Phase 2 begins when the price starts moving back up or against the downward trend. The ideal time to sell in this example is the same, the point at which phase 2 ends and phase 1 is beginning. Again, it would not be a good time to sell at the point where phase 1 is ending and phase 2 is beginning. As traders, it's generally advisable to trade in the direction of the dominant trend. For the same reason, it would be inadvisable to swim against a tide. Whilst technically you could choose to sell at the point phase 1 turns into phase 2 in an upward trend, you would essentially be moving in the opposite direction of the upwards momentum, and doing so may leave you at a disadvantage. So as we've seen, it is essential to understand the inherent behavior of the markets and make sure that we are trading with the trend. As we also noted earlier, the market generally repeats itself on many levels. So we tend to see smaller phases during shorter time frames, but we also see larger phases during longer time frames. Understanding how the market is moving at different time frames will give you the best grasp of the market's overall direction. This will ensure that you are able to judge the potential strength of a trading opportunity.